Hello and welcome to Insights with Thomas Caldwell on October the 27th, 2022. Tom, let's talk about the U.S. elections. They are coming up because it's November 8th, which is about 10 days away.
Yeah. It's interesting. The polls have been flipping and flopping right up until this election time. Clearly, you have a massive dichotomy within America between ideas and parties. I can't speak for Americans, but I would suspect that many of them want to see government by grown-ups. There's so much insanity out there, so many ideologues forcing their views down other people's throats. It's almost as if everybody wants a relief from it. It's possibly the ripple effect from President Trump that you still have extremes going on all over the place. I think many in America would like to see a whole new cast of characters, but we're not going to get there for a little while. And not to be too arrogant about it, but we in Canada also need government by grown-ups at some point in time. So it'll be really interesting because you have two competing visions of what America should look like and what it should do. And I've never in my time looking at U.S. elections, and I go back to Adlai Stevenson and et cetera, and that far back when Eisenhower was still president, I've never seen it so polarized as it is now. And it's dangerously polarized because sooner or later people get frustrated and can act violently type of thing. So we're seeing quite a watershed in America at the present time. So it'll be interesting to see. I have my preference, but what do I know? My guess is as bad as anyone else's.
So from polarized to volatility. Now let's talk about the markets.
Yes, well, there was a very interesting study done, it was several years ago, I think it was 2017 by JP Morgan. And they analyzed what types of investors are active in the market. And the number they came out with was only 10% of investors are really digging into the companies, looking at really strong fundamentals of the volume, that is, not of the investment, but of the volumes, are really looking at companies, trying to buy good companies, good dividends, growing, looking at managements. The other 90% is made up of professional trading entities, whether they be hedge funds, algorithmic, high-frequency trading, whatever. Because they may trade the stock in one company 100 times in a day, which creates massive volumes. Exchanges like that because it creates business for exchanges, but it does skew the activity. So if you have a fundamental change in a company that's this big, you might have traders around it make it look like this big. So you have this volatility, but it's not coming out of the fundamentals of the company or the economy. It's coming out of these trading entities that dominate the volumes on exchanges. So what does that mean? Well, how can you use that? Well, you can try to use, I keep saying this, try to use volatility for your own benefit. For example, when the market's getting smashed down, if I have companies that I really like, I've done my homework on, I work on the basis of that providing me an opportunity to own them at a better price. Because eventually the fundamentals come to be. They tend to dominate. You can have all this wobble factor in prices all over the place, but eventually reality takes hold. I always keep joking, the nice part about reality is if you don't seek it, stick around, it'll be coming.
Thank you for your insights, Tom.
Okay.
And thank you all for watching. Bye for now.